Well, let's get you what the top voices are saying. Ridham Desai of Morgan Stanley, well, he says that Q3 earnings growth was up sequentially, which was better than the subdued expectations. He goes on to add that the market looks good in the near term and we could be in for a near-term bottom, given that improving growth. If global cues do not surprise negatively, he adds that India should resume its outperformance in comparison to the emerging markets, and that could be rather soon. They're overweight on a few stocks, which include L&T, Bajaj Finance, ICICI Bank, Mahindra & Mahindra, Titan, Trent, Maruti, while they're underweight on Eicher Motors, RBL Bank, Wipro, Concord. So that's about Morgan Stanley and his stake. Moving to Surendra Goyal of Citi, he says that the headline trends in Q3, they missed expectations with the EBITDA growth of just 7% on a year-on-year basis. But he goes on to add that with a pickup in central government capex in the past few months, the budgetary support to the consumption space and also the start of rate cuts, he expects growth to pick up, but also goes on to add that the impact of the reciprocal tariffs from the United States will be something that could impact select sectors. After a decline of 12%, well, valuations at around 19 times 1 year forward is below the 5-year long-term averages. And the FIs, well, they're underweight on the benchmark, which is the highest that they've seen in the last 15 years. He winds down by saying that India looks relatively well placed post the correction, and their December 2025 Nifty target is 26,000. Moving to Rajiv Batra of JP Morgan, he says that Q3 was another subdued quarter with regard to earnings growth, which was driven by moderation in urban consumption, tighter liquidity, a depreciating rupee, and also the rise in input costs. But now they expect a nascent recovery in Q4 earnings on a sequential basis, and that's because of sustained upswing in rural demand, a rise in government spending, and also lower raw material costs. They add that despite the recent earnings downgrades, consensus expectations for calendar year 25 as well as 26 are still elevated, and that's why there could be further downgrades specifically in energy, materials, industrials, as well as passenger vehicle plays. They reiterate, though, their overweight stance on financials, consumer staples, consumer discretionary healthcare, as well as real estate. Well, let's wind this down then with a technical call coming in from Lawrence Blanco of CLSA. And he's particularly commenting on the dollar index. He says that the dollar index is strengthening the 103 support, though in the past 3 months, the US dollar index has been capped at around that 109.8 to around 110.18. And they found some kind of support in this vicinity of around 106, 107 area. A break below this mark of 106, 107 support would suggest that December's breakout, from that 2022 to around 2024 trading range was not genuine one, leaving the dollar index could head back to around that 99 to around 100 mark to that zone of around 106, 107 trading range. Within the old range, the 200 EMA offers some kind of support, the near-term support at around 104.8 area. So that's what all the top voices are saying with regard to the Indian markets, as well as Lawrence Blanco winding it up with the technicals. Well, thanks so much for tuning in to CNBC-TV18. Make sure you follow us and stay updated on all our social media platforms.